What is going on, ladies and gentlemen? Camilo here, and we're back. All right, my due sincere apologies for to all of you for my absence for about a week. Okay, I went on a family vacation, but here we are again, back at it on my desk, and I was really anxious to be here. Now, moving forward, I will let you guys know ahead of time when I am going away. Okay, I do apologize for that because if you were expecting my videos that I upload every single day, and obviously I didn't upload any for about 10 days, my sincere apologies. I will let you guys know ahead of time. I know it's unfair, and so moving forward, that's what's going to happen. All right, now last week and the week before, all right, before my absence here, I was letting you guys know that we are nearing a top, a short-term top in markets. All right, and there was one key Elliott, I'll call it Elliott wave. There was one key element in the Elliott wave count that was letting us know that there was going to be a potential reversal, along with what's been happening in the world, the COVID variant, and then some situations with Jerome Powell and the tapering program and the debt ceiling and so on and so forth. All right, so all of that put together is putting a lot of pressure in the markets. But now the big question now remains: is it going to be a meltdown? Are we going to start selling off? Are we even going to see the Santa rally? And I do have still some hope that the Santa rally is still upon us. We are going to see some further consolidation towards the early half of December, and then towards the end of the year, where that's when we will start gearing up for our end of year rally, if you will. Okay, and then to add to all of that, there was also an article that came out on CNBC this morning relating to what's contributing to the sell-off is a lot of traders, and this is what happens normally towards the end of the year. A lot of institutional traders and big hedge funds, whatever you call them, they start taking losses for tax purposes. So that puts another sell pressure in the markets too, and that's big money. All right, so anyway, as we do always, whenever we see a pullback, we start zooming out into the overall picture, and we start analyzing where we are within the moving averages, which are the traditional 50, 100, and 200-day simple moving average. Again, these are traditional indicators that a lot of traders watch. All right, so if we zoom into this zone here, okay, quickly to review with you, the orange line is the 50-day, as you see here on my upper left corner. The blue line is the 100, and the red line is the 200. Now, briefly back here, we had originally lost the 50, bounced off the 100, rejected the 50, sold off, and then we just existed between the 100 and the 50 for several days before we actually abruptly started impulsively up higher. Okay, now we are now turning back around, as we have done a couple of times here in the chart history, and we have now are trying to retest the 100 and the 50. All right, now taking you guys down to the 30-minute time frame, we're just going to dissect this interpretation here, actually this whole wave structure here, and let's take a look at the wave count and what that looks like, and what can we expect coming into tomorrow and next week. All right, so let me adjust scale here and then turn on my labels. All right, zoom out. And the way we're looking at this, guys, is that we are still, the trend has not changed. The trend is still bullish, the dominant trend. And we're still within the minor degree wave 1, pullback in the minor degree wave 2. But the overall structure is the intermediate degree wave 5. All right, so that means that potentially there's still more upside to go on this chart. All right, on the indices themselves. So this is why I am leading to believe that we are here to see the Santa rally. All right, there are alternate accounts. I don't want to review them with you because if you want to see the alternate interpretation for a bearish count, it's calling out a top here already on the wave 5 in the intermediate degree. All right, then join Trending Waves. The link to the Discord group is pinned down in the comment section. Okay, join for a free trial, risk-free, cancel at any time, leave the group if you want, stay if you will. And we'd love to have you guys. All right, so we share and bounce ideas back and forth, and we enjoy new people in the group. Okay, so the hint that we saw early on was this right here, okay, the 100% extension. All right, so wave 5, which started from November the 10th and ended here on November the 22nd, so 12 days of of impulsive structure, came into equality of wave 1. So that's one of the Elliott wave guidelines. Wave 5 should always be, at the very least, equal to the length of wave 1. So that's what we have here. Okay, we have an extension of equality, and that hinted a potential reversal, and then we started selling and fading. All right, and then we got that you know those that news from the variant and whatnot, and then we started the impulsive decline in the wave 2. So now I am in this belief that we are within the wave 2 pullback. Now, obviously, if we start seeing anything below price action moving south of the origin of wave 1 or the end of wave 4 here at 426, then this whole interpretation is invalid and our bearish count is at play at that moment. Okay, our overall and bigger wave structure, which I'll review at another video, but if you want to see the chart, join Trending Waves. Now let's take a look at the zone here and quickly dissect what's happening. All right, so from November the 22nd, we got our first decline in the wave A. We then gapped up, sold off, and then gapped up again. Now that is a corrective move. So that is already pairing up or confirming that we are within an ABC correction. So down in A, 3 waves up into the wave B, 61% retracement resistance, and now we are within this zone. Now we sold off in wave 1, ABC pulled back into the wave 2, which is potentially wave 2, and now we are gearing up for a decline in the wave 3. Now if we continue pushing on higher and breaking above the wave B high, all right, this wave B high over here, then it is likely that we have already completed the wave C. Not out of the question, but not likely. I mean, we are now, we've broken below several key zones, okay? And I'm going to show you which ones are those. Okay, one of them is the previous all-time high here on September the 2nd. Okay, that should have been our support zone, which it did, right? Because it acted as resistance here, support here, and briefly support sold off, and now we are reclaiming it. And that is also in conflict or in confluence with a 38.2% retracement, which is a common retracement zone for a wave 2 pullback. All right, now this is the key zone that I want to show you guys should we fail to rally. Okay, and what are the zones that we're looking at for the downside? Oh, there's something wrong with my mouse here. All right, so the 618 and the 50% retracement is the retracement of this wave 1, which we will find to the wave 2. So we have A, B, and C. So today we are spotting that it was having a hard time breaking above the 618. All right, so now we are noticing that the 459.28 is our key level of resistance. All right, we're now going to start rolling over should we not see this breaking above it, either in the post market and futures market and the after hours or whatever you call them. All right, if we start seeing a rollover or we start seeing action heading on higher, I mean, ideally we want to see higher price action, but the likelihood of that happening is less, it's less likely, and we're going to see further downside. Again, I hope that we continue seeing further upside because we have positions and we will take advantage of new positions to head on higher. So we're waiting patiently on the sidelines for this to occur. Otherwise, we see it for the sell-off, and the likelihood of hitting the 441.67 is not out of the question. We will then see a bounce. Hopefully, it's likely that it'll stay below the wave 1, and then we will continue further down. All right, to continue to complete the wave C or wave 2. All right, guys. So that is the SPY. Over to the Qs. The Qs is displaying a similar pattern. All right, the Qs. We completed the wave 5 here. Again, we did the 200% extension though of wave 1. Apologize for that, guys. My computer is acting a bit slow here. All right, so we did A, B, and C down into the wave 2, 38.2%, 50% retracement support. It is likely we haven't broken below the wave 3 or the previous all-time high here on September the 3rd or September the 8th. Okay. So that is likely that we are going to see it as acting as support because we find that it's coming in confluence between the 38 and the 50% retracement. Okay, so 385 and 378 are our support zones for the Qs. Over to the SMH. The SMH, we see that we are still within an ABC corrective move on the wave 4. We want to see support here down towards the $294 to the $291 region. ABC pullback 78.6, 314.47 was our resistance. All right, over to the IWM. I have to take you over to the 1 hour time frame. We are finding ourselves in what appears to be, or the likelihood of, an expanding volatility triangle. All right, so this triangle is always made up of 3 waves. All right, even though we have five overall structure waves in here, but an expanding volatility triangle, its substructure is made up of 3 waves. All right, so we have the sell-off here from the high of November the 8th, and this is a pretty good trade setup for you guys watching this video. What do I mean by that? Because here should be a good level of entry. Should this be the wave count, right? And our stop should be right below the wave 2. So at 210.63 should be our stop, should this continue lower. Otherwise, it is a good risk to reward. I mean, we have approximately, let's take a look, about 4% of risk to potentially make to the upper line here, 16 to 17% of profit. All right, so that is for me. That is it for me tonight. I do again sincere apologies for my absence, but you know, we're back at this again. Join Trending Waves. Give me a thumbs up on this video and yeah, subscribe to the channel. Take good care. See you guys tomorrow. Bye bye.